provision for depreciation and depreciation. Okay, so basically these are this is what we have seen in our previous session. Okay, so let's continue the same. Now here we have a new concept in S4. This is called a technical clearing account. Why do we require a technical clearing account? So let's discuss something about it. So when we post a transaction until ECC, we used to have one document number. I mean, we used to have only one journal entry. It means debit fixed asset, credit vendor account, vendor. This was the journal entry until ECC. But in S4, we have we have a different entry. So according to this, it is going to be debit asset, credit technical clearing account, and debit technical clearing account, credit vendor. It's the same. In between, we have a technical clearing account which is debiting in one case and crediting in another case, thereby it is getting cleared. But why do we require a technical clearing account? So because of this, we have two parts. Because of technical clearing account, we have two parts. It means in the concept, the technical clearing concept basically splits into two parts. The first one is the operational part. This is called operational part, and the second one is called valuating part. This is called valuating part and this is called operational part. With this, what happens is all asset master related tables will get updated. Asset master related tables will get updated. Whereas with this, AC DOCA will get updated. Okay, so that's the major part. The other part we have is operational part is going to be one. Why I'm saying one, let's discuss about valuating part. Now, in the valuating part, the document number is going to be different. One document number we will have here, another document number we will have here, two different document numbers. And both of them will get updated as soon as we post the transaction. It means we are not running two different transactions in order to have these two document numbers. Within the same transaction, we can see these two documents. One is saying as operational part, the other one is saying valuation part. Now, in the case of valuating part, let's say if a particular company code has multiple valuations, I mean accounting principles basically. So the valuating part will have a separate document number for each of the accounting principles. Suppose if at all we have IAS, IFRS, GAAP, US GAAP, or international GAAP. If at all you have these many, it means you will have four document numbers with the same. It means entry going to be the same, but you may have different amounts. You may have different amounts. If you want to post specifically to the ledger, then you can see a different amounts. But if you don't post any transaction to specific to any ledger, the amount is going to be the same, but you will have four document numbers and debit is going to be this, credit is going to be this. It means for every accounting principle, we will have a separate document number. and separate entry. But for all these, you will have only one entry that is called operational part. So operational part will take care of all of these. It means we will not have a separate document number for each of these accounting principle, but whereas the evaluating part is the one that will have that will have multiple document numbers based on the accounting principles. Any questions? Okay, so this technical clearing account is what? This technical clearing account is a reconciliation account. It is a reconciliation account, asset related reconciliation account. And it should be a balance sheet GL. Balance sheet GL. It should not be a profit and loss account. Okay. I mean the GL, whatever are you picking up, it should not from the range of profit and loss account. It should be in the range of the fixed assets. Next, the second thing is this is the first balance sheet. I mean the GL going to be a balance sheet GL. It should be a reconciliation GL and should not be this GL should not be considered in in account determination. Yesterday we have seen account determination. The transaction code for that is AO90, AO90. Okay, so we have maintained the GLs there in the assets determination, right? For in the account determination, we have picked up the asset class and maintained the APC value, provision for depreciation, APC GL, provision for depreciation GL, and depreciation GL. So this technical clearing account should not be there in that. That is the other condition. So these are the three conditions that we have in the case of technical clearing account. So first is technical clearing account should be a balance sheet GL. It should be a reconciliation GL for assets. Third one is it should not be maintained in AO90, account determination. Any questions? So let us go and create the technical clearing account. I'm opening another session going into FS00. So I'm selecting fixed assets. It is okay. I'm selecting electrical fittings. I'm just copying the same thing. I will say 2,10,000, 2,10,000, and I will say here technical clearing account. So technical, and it has to be a balance sheet GL. It has to be a reconciliation for asset. And the third is going to be this GL should not be maintained in AO90. Rest all same. I'm just saving technical clearing account. Okay, now this technical clearing account should not be maintained here. We should not maintain this technical clearing account in the account determination. Here we should not maintain. That's the condition. So these are the three basic conditions for the technical clearing account. Any questions? Okay. So let us maintain, let us maintain now this GL in the technical clear in the configuration. So just go back. So technical clearing account. Define technical clearing account for integrated asset acquisition. Path for this is IMG, financial accounting, asset accounting, integration with GL accounting, technical clearing account for integrated asset acquisition, define technical clearing account for integrated asset acquisition. Just execute. Okay. Here for our chart of accounts, we will have to maintain the relevant technical clearing account. So go to new entries and our chart of accounts is 1248, and to this maintain the technical clearing account. So our technical clearing account is 2,10,000, 2,10,000 technical clearing account. Just save it. Okay, so we have assigned the technical clearing account. Basically, technical clearing account, the concept of technical clearing account is just to show the journal entry specifically for each of the accounting principle. If at all we have two accounting principle, it means that with the technical clearing account, we will have two value, we will have two parts. One is the operational part, the other one is the evaluating part. And within the evaluating part, we will find the number of documents based on the accounting principles. Just to save it, go back. And the next we have is define different technical clearing account for required field control. So here what we have done, the technical clearing account we have maintained at our chart of accounts. This chart of account is linked to our company code. Okay, thereby this technical clearing account is linked to our company code. Now if we want, we can maintain a technical clearing account based on the account determination. It means in our example, we have 6 account determination. I don't remember the sequence, but one is a plant, one is machinery, one is land, one is computer, electrical fittings, and furniture. There could be something else. Okay, so if you want to have a separate technical clearing account for each of these, we can maintain over here in this. Define different technical clearing account for required field control. Path is the same, just execute. Here you see the chart of accounts and account determination. So we have multiple account determination. If you want, you can maintain based on the account determination. So furniture, machinery, computer, building, land, and electrical fittings. These are the 6 account determination relevant to our company code. So if you want, we can maintain a separate technical clearing account for each of these account determinations. Normally, we don't maintain, but if at all we want, we can maintain it over here. If nothing is mentioned, it means it is applicable for all account determination. Back. Next. Integrated transactions, alternative document type for accounting principles. So as we have seen just now, right, in the technical clearing account concept, you can have basically two parts. One is operational part, the other one is valuating part. In the case of valuating part, you can have multiple document numbers based on the accounting principle. So do you want to consider a separate document type? Then you can do that. That is called alternative document type for accounting principles. Just expand that, specify alternative document type for accounting principle specific documents. Path for this is IMG, financial accounting, asset accounting, integration with the general ledger accounting, integrated transactions, alternative document type for accounting principles, specific documents, specify alternative document type for accounting principle, specific documents. Just execute, and here this is the original document and what could be your derived alternative document type. So if you don't enter anything over here, it means system will consider the same document type, and the moment you mention over here, this is called a derivation. If at all we are posting any transaction in respect to this document type KR, and in the valuating part, the document number will be considered based on this document type. So you can see, you can have this document type in posting the transaction. We will see this kind of information in the front end at the time of posting the transaction. We will see, we will come back here, we'll make some changes, and we'll see the importance of this. Okay, so normally we don't maintain. If at all we want, we can maintain. Normally we don't maintain. If at all we want to maintain, of course we always consider AA. AA is the document type for assets. If you see our list of document types, the first one is the AA. This is for asset postings. AA is used for asset postings. The next we have is AF, depreciation postings. In all our depreciations, the document type going to be AF. The document type going to be AF. Any questions?
Nanda, I think it will make a lot of sense, when we just see the transactions, because otherwise it's going everything top of my head.
That's what I'm saying.
Yeah.
So just understand the technical
Yes.
clearing account part, understand
Uh,
it. Of course, we will see what is operational, what is,
yes. Yes.
the evaluating thing and all. Of course, I've explained it's going to be the same. There is no
Okay.
change in that.
But there are a lot of steps, in S4 HANA. This is the
Hmm,
technical things, it is completely new and so many steps to follow.
correct, correct,
It will take little while, to digest all.
correct. Okay, so that's about the document type, alternative document type back. Next, define separate document type by company code. If at all you have, that this is based on the company code. Path is the same, and just execute. You can see for for a particular company code, if this is the document number, what is my derived document type. Okay, it is similar to that of, the sequence, the logic is the same, similar to that of technical clearing account. In the first step, we have just maintained the document type and derived document. In the second step, we are considering the company code.
Tanda, why
Mhm.
don't we just simply, use the document type AA rather than, just first use KR and KR transfer to
No,
the AA?
if at all you are posting a transaction by creating the purchase order. In the purchase order, the document number cannot be in AA, right? You will have WE,
But
right? Then,
yes,
so if you want WE, you can go ahead and you don't require to maintain over here.
yeah,
If you want the document type, I mean, based on the document type, the number range will come up, right? This number range is important the moment we post a transaction and when you have a technical clearing account. Here, this is one document number and this is going to be another document number. And this document number, how do you want to consider this document number? Do you want to consider, do you have any the specification to consider a particular number range? Then you can use the relevant document type and accordingly the relevant document number gets generated. That's the whole idea of it. Okay, so that's about this company code derivation thing. Next, specify posting keys for asset accounting. We have seen so far posting keys 40 debit GL, 50 credit GL, 01 debit customer, 31 vendor credit, 29 vendor debit in the case of advances, right? We have seen all these kind of things, right? So what are the posting keys in respect to the asset accounting? There are two posting keys basically that we will consider. One is 70, the other one is 75. 70 for debiting the asset, 75 for crediting the asset. So the same thing is mentioned. This is a standard step. We don't have to do, but just to see what are those posting keys. Specify posting key for asset postings. Path for this is IMG, financial accounting, asset accounting, integration with the general ledger accounting, and specify posting key for asset postings. Just execute. We can see the relevant information. Right. Asset postings, just double click on transaction ANL. So you can see debit posting key and credit posting key. 70 for debiting the asset, 75 for crediting the asset. If you see over here, you see A stands for asset, D for debit, 75 asset, C for credit asset. We have seen 40, 50. We have seen 39 as well. We have seen 31. We have seen 29. We have seen 25 as well, right? Next, we have also seen credit memo 21. And here on the customer side, 01, we have seen 09 customer debit special GL transaction. 19, of course, we have one more special GL. This is for credit and this is for debit. And 15, there is one more it in the case of incoming payments. These are the posting keys that we have covered already. Now here we have 70 and 75. So 70 for debiting the asset, 75 for crediting the asset. Just go back. Next, change the field status variant of the asset GL accounts. So we have created some assets and we have maintained the field status variant as Z067, which is created for reconciliation. If you want to change them, you can do it from here, but normally we don't do anything here. Change field status variant for asset GL accounts. Path is the same, just execute. Here we have three steps. First is the define field status variants. This is the original, the configuration place where we have already maintained a field status variant. Double click on that, it will take you to the same place. Here we have already created, and select the same thing, field status group. And if you want, you can create your own or whatever you want, you can do here. So, but we have considered 67. This is the one that we have considered. Back. Change field status for posting keys. This is for posting keys. In the case of posting keys, we will have a field status, but all the time we will keep the field status as optional in the posting keys. Okay, just double click on this. Okay, here you have posting keys. Just double click on it. It will take you to this place. This posting key is used for debit, and this is for customer. And the reversal is 14. Of course, we have seen this already. Now here you can see field status, maintain field status. So here normally we will keep everything in the optional. Either we will keep in the optional or we'll keep in the suppress, but we should not take it as a required. Someone has made this thing, but we should not consider anything as a required. Why required? Why we don't change anything? I'll just give an example that that is the error that we come across. Now I'm saying 40 posting key. This is posting key, and I'm debiting a GL, right? I'm saying a GL account, let's say 4 lakhs. This 4 lakhs as Z04 is the field status group. Let us assume in the GL master, we have maintained this field status. According to Z004, the text field is required. According to field status group Z004, text field is required. This is as per GL. But according to the posting key, the text field is suppressed. What is happening? Two different controversial configuration. This is called controversial configuration. As per posting keys, it says it should not appear. As per GL, it says as a required entry. That's where the controversy arised. In one case it is saying as suppress, in another case it is saying as a required. That's a controversial configuration. So system will throw up an error saying the field status is not matching. So because of that, the posting keys always we will maintain as optional. The standard system will have optional for all these posting keys. So someone has made some changes here in the system, but normally these will be maintained as an optional. Whereas the typical, the field status thing is important from the GL perspective. So that is the potential error that we can see in the case of controversial thing. Any questions? Now, check assignment of company code to field status variant. Just double click on this and you see for our company code, what is our field status? Okay, this is what we have considered. Back. Next is assign input tax indicator for non-taxable acquisition. Of course, we have already covered this. There are two steps. One is over here and the other one in the financial global settings, and under taxes, we can find the similar step. Either you can assign it over here or there, but it's going to be the same. Until unless we don't assign the 0% tax code to our company code, system will not allow us to assign the chart of depreciation to the company code. Of course, we have seen this error earlier. Any questions? Assign input tax indicators for non-taxable acquisition, just execute. So here we have maintained already the input tax and output tax. Back. Next, specify financial statement version for asset reports. So we need to specify, we have already created one financial statement version. So do you want to consider the same thing for asset reports? Then we will be maintaining the same thing over here. Specify financial statement version for asset reports. Path is the same, just execute. So our company code is 1248. Select the same thing, double click on assign financial statement version. Double click on it and you can see your financial statement version. Okay, 1248 is our financial statement version for each of these depreciation areas. For each of these depreciation areas we have. So if you want to create a separate version, let us say why this is so important. If you see over here, we have a different 40 and 50 are uh, different depreciation areas for capturing different accounting principles, right? In the case of accounting principle, the reporting structure is different. So if you want to show them specifically, you will be creating a separate financial statement, different financial statement version for 40, another financial statement version for 80, and we will assign it over here. Then the moment we execute our financial statement version using this code, then we can see our report according to that particular accounting principles. But in our case, we don't have a separate financial statement version. I'm just keeping the same financial statement version for all the depreciation areas. I'm maintaining the same thing. I'm not changing anything. Suppose if you want to have a separate financial statement version for 40 depreciation area, you will be creating a financial statement version accordingly and will be assigning it over here. Any questions? Okay, that's it. So come back. Of course, these are all the standard things. I mean, the moment we assigned our financial statement version to our company code, that happens here automatically. Next, post depreciation to general ledger accounting. Specify document type for posting depreciation. So what is the document type do we want to consider for our depreciation runs? That is what it explains here. Path for this is IMG, financial accounting, asset accounting, integration with general ledger accounting, post depreciation to general ledger accounting, and finally specify document type for posting of depreciation. Okay, just execute. double click on document types. This is the place where we have this is the place where we maintain, where we create our document types. So back, double click on, this is important for us now, specify document type for posting of depreciation. Double click on this and you have company code, and by default you got a document type as AF. If you want to have a different document type, you can make the same thing. You can do the same thing. Okay. So if you want to have a different document type, you can do the same thing. Back. Next, document type for cross company code cost accounting in external company code. If at all you have any cross company code transactions, then in such a case, we will be using this. But this is something relating to cost accounting in external company code. Not sure exactly where we use, but just execute over here. There is a transaction type. Not sure. I'll just find this out. I'm going into the documentation. In this activity, you set up the document type that you want to use for posting depreciation in target company code when you use cross company code cost accounting. Cross company code cost accounting. You have to have enter the internal transaction type for depreciation posting. So not exactly what is this about, cross company code cost accounting. So probably this is something relating to two different company codes of two different controlling areas. This may be the concept of that. So if at all you have two different company codes and one company code is linked to one controlling area and the other company code is linked to the other controlling area. And if at all we are making a transfer between these two company codes, and what is the document type that you want to consider, that is what it says. So in the case of depreciation, it has to be considered the document type. But I'm not sure, we never tested this scenario at all. And I think it is there in S4 only. It is not there in ECC. This is the this is a new concept in S4. I've never tested this. Back. Specify intervals and posting rules. This is the most important, one of the most important concepts. Specify intervals and posting rules. How soon you want to do a posting run? I mean depreciation run. Do you want to run depreciation monthly, bi-monthly, quarterly, half yearly, or yearly? How do you want to do that? That is what we will explain over here. And because of ERP systems, what basically ERP does is it gives you the picture immediately. The moment we post a transaction, it gets updated into the reports. And the important part from the ERP side is we can see our financial statements at any given point of time. But in order to see our true balance sheet at the end of each month, it is always important to create, to run the depreciation monthly. So remember to pick up the depreciation monthly. Of course, this is a business requirement. Whatever the way they want, they can they can go ahead. But we have options of these. So specify intervals and posting rules, just execute. And here our company code is 1248. Select the same thing, double click on posting rules. Here you see it is based on the depreciation area. So earlier, I think it was not the option in the, I mean, it is not there in ECC. It is there in S4. I still don't remember exactly, but this is a new concept in S4. Now, according to what? It means for 01 depreciation area, you can go by monthly. For 40, you can go by quarterly, and for 80, you can go by yearly. You have an option. But in earlier versions, this is not the case. We used to have one rule for all depreciation areas. Okay, so what I'm doing, I'm just selecting this, going to details or double click on this. Going into details, now here you see by default you can see a monthly, but if you want you can go by bi-monthly, quarterly, semi-annually, it means half yearly and yearly. Or you can select and enter in expert mode. It means you can define your own. It means if you want you can do it in 10 days, 15 days, 2 weeks, 3 weeks. You will have to do some programming for that if you want to go by expert mode. And period interval, it is one. It means every month it will be a monthly thing. So I'm just selecting F1 or here. You see number of periods between two depreciation runs. Between between two depreciation runs, what is the gap that you want to consider? You specify the interval between two depreciation posting runs in this field. Define this interval by entering the number of posting periods that should be in the interval. Key to determine when using a fiscal year version with the 12 normal posting periods. So normal posting periods are 12. If I say 1, it means monthly posting. If I say 3, it is going to be quarterly posting, 6 months and yearly. Depreciation posting runs which result from the changes to the valuation due to year-end closing and take place after the year end of the fiscal year can be posted as unplanned depreciation posting runs in the special periods of the given. So if at all we change anything in the case of fiscal year or something, and if at all any missing depreciation to be considered, that will go and fall in the special period. So we have four special periods, right? Apart from 12 non-special the normal periods, we have four special periods. So the depreciation whatever is not covered will be considered as unplanned depreciation and will go and sit in the special periods. Okay, so the that's about the period interval. Next is other postings, other posting settings. Post interest. Do you want to consider interest also while posting the depreciation? Then you can select. Post to revaluation, revaluation of an asset. Let's say we have procured an asset with $1 lakh. So it works for 10 years. That's the assumption. So every year we are providing 10% depreciation. After 3 years, it means after 30,000 of depreciation, the net book value going to be 70,000. But when we revalue it, we got, instead of 70, we got as 80,000. It means the additional 10,000 is called revalued amount. Do you want to consider the depreciation on on the revalued amount? Then select this accordingly. Otherwise, we don't require. Next, below zero account when planned life ends. Now, this is basically in the case of diminishing balance. What exactly the diminishing balance? Of course, we have already seen that. Let's say 1000 is the asset value and 10% is the depreciation every year under the diminishing balance, declining balance. It means on 1000, 10% will be 100, that will be deducted, and 900 will be considered for providing the depreciation in the second year. On 900, 10% 90. So it's going to be 810. On 810, 10% going to be 810, 81. So that's going to be 709. How much? 9 to 20, 729. Now on this 73, right? So it goes on. If I say 10 years, at the end of 10 years, this will have still some balance. So do you want to consider, do you want to calculate the depreciation even after the useful life is covered? Then you need to select this. Below zero account when planned life ends. Even after 10 years, do you want to consider? Then select this. Otherwise, just ignore it. So basically, we are selecting here monthly posting. It is best option to consider monthly so that we can see our financial reports, financial statements monthly. Any questions? Okay. So similarly, we can do it for 40 and we can do it for 50. Sorry, 80. For 80 and 40. This is one of the important steps in the asset accounting thing. Okay, the next we have is country specific. Of course, it is not required. Clear? Any questions here until here? So we'll discuss the segment reporting and all other things in the next class, in the next session. Okay. Thanks a lot. Thanks everyone.
Thank you.